You know, maybe it's a gut feeling based more on a lack of confidence in the economy and a very dramatic race for the White House. Or maybe it's concerns about the Fed hiking rates, or maybe it's just general worry that begets selling, that begets even more selling. But coming into the week, investors, we're talking about selling equities by hand over fist. In fact, according to the Investment Company Institute, last week, there were outflows of $13.4 billion in equity ETFs, $3 billion in funds. In fact, all total the past 5 weeks coming into this week saw more than $50 billion in equity outflows. Now, I think people are foolishly telling themselves that this market is reacting to good news, even if retail sales and consumer confidence numbers came out today were better than expected. But am I right? Joining me now to discuss, Peter Morici, Steve Moore, and Kelly Riddell. Peter, I'll start with you because you did tell me last night that you felt pretty good about this economy, and the data out today backed you up, and yet the market still fell completely apart. What's going on?
Well, yesterday we talked about the fact that Macy's was down and Nordstrom's was down, and the market simply hasn't gotten used to the fact that the large retailers are no longer a good indicator of consumer spending because they're using their money through other channels. And lo and behold, retail sales rocketed last month, even though things were down at Macy's. They're spending it at Amazon and in restaurants and so forth. The market has to adjust its perception as to what are good leading indicators of where the consumer is going, or it will drive growth. We are going to have a much better second quarter and even a better third quarter than we did a first quarter. And sooner or later, the profits will catch up, the market will catch up, and we'll be happy if we stayed in.
You know, Steve Moore, I looked at that retail sales report. The internet sector up 10% year over year was the best one by far. There's no doubt. That's why you see Amazon where it is. But having said that, you know, if our economy goes to this point-and-click economy where people don't go to work, how can the overall economy benefit? I can see how a handful of companies will do well. And what's your overall assessment of where this economy is?
You know, you're right. There are mixed signals. And Peter mentioned what's good about the economy, and I think he's right about that. But I want to point out some things that really have me troubled. And by the way, one of the reasons, you know, retail sales are good is because we saw the big drop in oil prices. And that meant that people saved money at the gas pump. And guess what? A lot of that money got spent at restaurants and clicking for things that they wanted on Amazon or whatever it was, the internet company. But here's what troubles me about this economy. And I think it is deadly that businesses, Charles, are not investing. And so we've had 6 months now, Peter Morici, of negative growth in business investment, and I think that's the best forward-looking indicator. So I'm not as bullish as you are over the next 6 months about how this economy, we went from 2% growth, now we're down to 1% growth. At best, I see us going maybe crawling back to 2%.
Peter, before you jump in, Kelly, I want to ask you about the political ramifications of this. Obviously, if the market's going up and there's job creation, that should help Hillary Clinton. But it's all been mediocre, right? We've learned how to celebrate mediocrity in this country. Is that enough to get Hillary into the White House?
I mean, it could be, but there's some reason to worry about these, about the consumer sentiment numbers and the retail numbers. If you look at what people are buying, what they're purchasing, they seem to be more prudent investments. Home Depot's up 19% on the year. People are investing in their house. They're buying automotives. Gasoline prices are down, and that seems to be driving that at convenience store purchases. But if you look at the average mom that goes into Macy's and wants to buy herself a pair of heels and a party dress just for the heck of it, they're not. These more extravagant purchases are not happening, which is worrisome. Also, if you look at consumer savings, the consumer savings rate today is 5.4%. Actually, that's higher than it was a year ago. So this indicates that people are not as optimistic about their future as maybe the consumer, as they think they are when they look at the gasoline prices. They want to save, and maybe it's just they're unsure about what's going to go on.
You know, it was interesting too in this report. Gas prices have gone up a little bit, and so gasoline sales were higher too. But Peter, we've got like 20 seconds or so, but I want to give you the last word on this. What gives you pause about the economy?
Well, I have some pause about investment spending, but one of the things that I know about investment spending is we need less capital to grow now. Look at how little capital founded Google. I think we're going through a fundamental structural adjustment as to what the signs are going forward of growth.